Good afternoon. This is Sean Golding with Golding & Golding, here to discuss the FBAR. Now, at my firm, my team and I, we specialize exclusively in offshore disclosure and compliance, international reporting, and out of all the different types of forms and questions we receive on the daily, the FBAR is the one we receive the most. It's the one that puts the taxpayers in the most amount of fear because it's the one with the most amount of fear-mongering. So what I wanted to do is take no more than 10 minutes, right, because I don't want to bore you silly, and give you an idea about the basics of the FBAR. Obviously, this is not all-encompassing, but the goal is to have you walk away from this and have a pretty good understanding about the FBAR. So let's start it out. FBAR is for foreign bank and financial account reporting. It's not just for bank accounts. A lot of people think that, and that was the general consensus back in the day, but as time's gone on, FBAR has been around for over 50 years, enforcement, protocols, etc., etc. It's all different types of foreign accounts. Bank accounts, investment accounts, securities accounts, mutual fund accounts, ETF accounts, foreign life insurance that has a surrender value, your pension plans, a whole lots of different items. Individual real estate, no. Stock certificates that you own, no. Stock accounts. Yes, the idea is it's an account, but it doesn't have to be a bank account. Now, the filing of the form and the type of form has morphed over several years. It used to be paper, a TD form, and now it's electronic FinCEN Form 114. The due date used to be June 30th. Now it's April 15th, but it's on automatic extension. The threshold to have to file the FBAR is the following. If the taxpayer has more than $10,000 in annual aggregate total of their foreign accounts, and we'll get to that in a moment, what annual aggregate total means. It's on automatic extension through October, so you don't have to file an extension if you miss the April date because it's on automatic extension. And the reason why it's so important is because of the non-compliance issues. The IRS has really been enforcing this lately, and they have been issuing extensive fines and penalties. Now, penalties could either be non-willful, willful, or criminal. Most of the time they're non-willful. And under a Supreme Court case in 2023 called Bittner, the penalties are severely limited to what they used to be. That's your baseline, right? Who has to file the FBAR? Individuals, it's typically going to be U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test. Now, there was a recent case, Arroeste, where a taxpayer was overseas for a time period, made an election to be treated as a non-resident for tax purposes. The IRS takes the general position that you still have to file the FBAR. Plaintiff disagreed and won. Notice of appeal was filed, and then it was dismissed with prejudice, I believe, in May or June of 2024. So that's kind of floating around, right? But the IRS would say you have to file. A little basics about the filing. It's an individual requirement. Your tax return, you may file joint. If one person has assets, the other one doesn't, that are foreign, 8938 may be required, even though only one person has the assets. The FBAR is an individual requirement. So if you have to report it, then you report it. And if you don't have to report it, you don't report it. In other words, if you're married, let's say, and your spouse files it, that doesn't mean you have to file as well if you don't meet the annual aggregate total. Now, it's not only for accounts that you own. It could be accounts that you own. It could be joint accounts. It could be signature authority. So you don't even have to own the account. You could just be a signer on the account. It could be a situation where your elderly parent has $1 million and they go, hey, we love you. We want to leave you the money. We're going to put you on the account joint, but, God help you if you touch that money, right? It's not really yours, but your name is on the joint account, so you have to file the FBAR. The fact that the money is not yours doesn't matter. And in fact, the FBAR has a separate section for accounts that you don't have a financial interest in. There is a kind of sort of exception. If it's, let's say, a spouse files and has a bunch of accounts, and then the other spouse, let's say, has no separate or individual accounts. The only accounts they have are the shared accounts with the first spouse, then technically they may not have to file an additional FBAR. There's a 114 lowercase a that is maintained, not filed, to show the understanding between the parties as to who had to file. But typically it's better for both people to file, just so the IRS has it in their records. Not always, but generally it is. The threshold requirement is one of the most confusing things for taxpayers, understandably so, because there's so much bad information online. It's not $10,000 per account. It's more than $10,000, an annual aggregate total. You could have one account with $300,000. You can have 20 accounts with $800. Sorry about the math. That's $16,000, right? So 20 accounts with $800, that's $16,000. You still have to file the form and report all of the accounts. Dormant accounts, zero balance accounts. If it gets to 25 or more, then there's a different way to file it. But at the end of the day, all the accounts are reportable. So why is this so important, right? The main thing are the penalties. The failure to file can result in significant fines and penalties. If you're non-willful, it's $10,000 per year, typically up to 6 years. And that $10,000 adjusts for inflation. So it's more like $14,000 or $15,000 now. That's if you're non-willful. If you're willful, 50% maximum value. You have an account with $4 million in it, they could try to hit you with a $2 million penalty. And they're not limited to 1 year. They could do it for multiple years, typically up to the maximum value of the account in the compliance period. It used to be different. It used to be 300% of that, if you could imagine, but now it's pretty much limited to the 100% mark. Another important thing is that audits and examinations are on the rise. So we've been finding when people come to us, they misrepresented information on the return, either intentionally or by mistake. The IRS is really trying to enforce this and go after fines and penalties because in addition to FBAR, typically there'll be ancillary issues as well, such as unreported income, unreported rental property, unreported businesses, foreign trusts, all that kind of stuff. Quick side note, even though we mentioned the 3 different individual categories, domestic corporations, things like that, entities, trusts may have to file as well. It's not limited to individuals. The FBAR is complicated in the sense that trying to figure out what accounts are reportable and especially what to do if you missed it. If you haven't missed any reporting, this is your first year, let's say, it's not a big deal. It's just a form. The IRS is not, why would they, there's nothing for them to come after you for, no matter what any nonsensical fear-mongering attorney will try to sell you online. Everyone says they're an expert. Your attorney should be board certified, but it's important to not make any proactive representations to the IRS if you are late until you get your ducks in a row. So before you file for the current year, if you were supposed to file in the prior years but you didn't, then you got to take a step back. You don't want to file in the current year without going back because that's what's called a quiet disclosure. It doesn't mean you're willful. It doesn't mean you're going to jail. So don't let anyone fearmonger you. But the FBAR is vast. And so I'm hoping that this brief introduction gives you an idea of the basics. We've got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.